We all know that India is a much sought after investment for real estate in Asia Pacific. We have attracted over 23 billion in investments since 2018. And the institutional real estate investment in India increased by 27% year on year during the first 9-month period, with an increase in both industrial and residential deals. So we know that there are various ways in which we can invest in real estate through the real estate investment trust, fractional ownership platforms, real estate mutual funds, or investing in land parcels. And today we have someone who can best explain to us the intricacies of investing in real estate, and is none other than Mr. Abhinandan Lodha. He's chairman of the House of Abhinandan Lodha. He has been in the real estate business for over the past 20 years, I suppose. And incidentally, his firm is also betting big on the infrastructure development in Ayodhya, and has been in the news for that too very recently. I think, Mr. Lodha, we'll start with something on a broad scale, on a broad brush, as to the potential of the Indian real estate sector. We know that the real estate sector has gone through its own ups and downs. You know, it has been at one time, it has been a haven for all kinds of fraudulent investments and black money and all sorts of things. We have seen how RERA has come in and changed that to a large extent. What is the current position, and what is it looking at from an investor point of view? What is the kind of potential you see in real estate?
Afternoon. Thank you for having me. So the Indian real estate sector is an extremely interesting analogy to the way the economy functions. And most reports will tell you that 70 to 80% of the wealth of most Indian households is invested in the real estate asset class. Having said that, I think the opportunity of real estate investment has never been as interesting as it is today. So, you have asset classes for every kind of investor in real estate today. You have the new asset classes like the REITs, which allow you to run the fixed income instrument parallel through buying REIT shares, and you also have the economic upside of that. We've also been seeing what has been a large change in the way real estate consumption is taking place in urban areas, and that's reflected in the way you see volume changes and value changes in most urban cities in India at this point of time. Mumbai, Bangalore, Hyderabad, Delhi have all doubled or tripled their volume sales over the last 2 or 3 years. But I think the most interesting part is that India itself is changing extremely fast. And if you go back historically in time, I think the best return assets in real estate in India have long been the ability to own land. And if you've had the ability to own land in the right place at the right point of time and hold on to it for a large amount of time, 10 to 20 years, then the kind of compounding return which it allows you to get is extremely difficult to match anywhere else. So the new developing India, the cities which are probably what I would say tier 1 minus today, the Lucknows and the Ahmedabad and the Surats and the Barodas of the world, where there is large scale infrastructure development happening, large scale job creation happening, and the state and the central government are coming together to create infrastructure havens. So if you take the example of the Mumbai-Goa drive today, it's a 10-hour drive if you want to go from Mumbai to Goa. But with the new Mumbai-Goa highway getting inaugurated in December 2024, the drive will come down to 4.5 hours. And the moment these kind of infrastructure changes happen in any location, then the amount of real estate return which it generates is paranormal and disproportionate. So I think real estate as an investment class is extremely attractive today. It has got multiple avenues. It's got real estate investment trust. It's got the ability to invest in land. It's got the ability to own fixed income assets. But most importantly, in my knowledge, the ability to participate in growing India is where the maximum amount of returns will be made for investors.
Now that you have highlighted, the overall potential of real estate segment, as far as plotted development is concerned, I think you are one of the largest holders of, such kinds of land parcels. You have had experiences across the country. You have done some very unique kind of investments in Ayodhya, which you could also highlight, tell us your experience. So we would like to know more about, the potential of plotted developments, the returns, for instance, the size of the ticket sizes, etc.
So I think plotted development or ownership of land goes back to the very base feeling in almost every Indian. I think that whole concept of zamindar and zamindari and the desire to own land has to be extremely important part of our psyche as we build up. I think the investment in stock market and all other asset class has an acquired taste, but the investment in land and gold is an inherent taste in almost all Indians. The problem for a very, very long point of time in India was land gives compounding returns over a period of time. You should not be buying land if you've got money for 1 or 2 years. And if you're buying long-term in land, 10 years, 15 years, 20 years, then you've got a few problems. The problems start from the ability to own the land for a long period of time in terms of keeping the title clean, ensuring that there are no encroachments which happen, ensuring that all approvals are taken and kept clean, and ensuring that if at times you require liquidity, then that liquidity is available by selling in the vicinity. If you take all of these 4 problems, I think these 4 problems are what was coming together to prevent a lot of Indians from buying retail land as an investment class. And it was only being bought for consumption. I am from Ahmedabad. I want to build a house for myself. I'll go and buy a piece of land close to the peripheries of Ahmedabad because I can go and see it almost every week. And I'm going to consume it in the next 12, 24, 36 months. What we've now seen, and I'll give an example of what we are doing at the house of Abhinandan Lodha, is we believe the future is actually in dematted land. It's in the ability to sit in any part of the world, talk to an expert across the screen whose brand you can trust, and understand from him where your investment avenue and the government's infrastructure is actually coming together. There is short-term, mid-term, long-term creation of wealth happening in land. So if somebody had the ability to have the foresight to have bought in Ayodhya in 2022, then the kind of return he would see in a 4-year period would be quite phenomenal. But if somebody would have the potential to go and buy land in Konkan today, then the kind of return you would see over a 10-year period is quite large. Now, what we've managed to do is we've essentially said over the last 2.5 years, we've done an understanding of the entire country. We've identified 48 locations across the country which we believe are great for owning land, for wealth creation. And we believe that should be the primary reason to own land. You need to own land if you want to compound your wealth and make it intergenerational. It's the best asset class to own for that. And if you're able to make the transaction frictionless. So for example, at the house of Abhinandan Lodha, we never have a physical interaction with any of our consumers, ever. Over the last 2.5 years, we sold close to 3,000 crores worth of land to 6,000 consumers, and we met 78,000 consumers all across the screen. Nobody's ever visited our office. Nobody's ever visited our site. And most people can actually come on our app, download the app, have a sales call, understand why we are sort of looking at the location as a great mid-term, short-term, long-term play, buy, build, lease, design, resale, everything across the app, which largely now means that I can be sitting in Chicago, have the desire to own a $100,000 investment back home in India. I can pick Uttar Pradesh as my home state because I believe there is great infrastructure work happening there. Then I can go to Ayodhya, select a piece of land sitting in Chicago, do the transaction completely online, and eventually after 5 years exit without ever actually having to go to that land. The use of technology in real estate as an asset class is going to fundamentally change the way people are able to participate in it. It is going to change the kind of returns it is generating, and it is going to ensure it comes at the forefront as an alternative investment class which you need to be a part of if you want to create compounding returns over a 5-year period or above.
Well, that's wonderful. I mean, I think, in fact, in the entire session today, we were talking about digitization and how things have gone to the next level. And when customers make such big investments without even meeting, the company, the firm, then that speaks volumes to the way in which things can happen. So how does the interface look like? I mean, one can actually view the properties, and what about the other land, I mean, the documents and other stuff?
So I'll give this as part of an analogy. So this is, Mr. Amitabh Bachchan has bought a piece of land from us at Ayodhya. This is, I think, bought in January 2024, this year. This was right before the mandir got inaugurated. And we've had the honor of knowing him for a prolonged period of time. So he called up one of the people in our organization. And he said, I want to buy the land in Ayodhya. Do I need to go there? Because that's a problem for me. So we said, no, even if you want to go there, you can't go there. You will log on to our app. Once you log on to the app, you will have somebody will fix a call for a video conference with you. Once you come on the video conference, you can see everything across the screen. Which piece of land you specifically want to buy, what is around it, who are the people who are buying around you, what is the view going to look like, how many minutes you need to take to walk to the clubhouse, how many minutes you need to take to get to the station, how much time does it take to go from the entrance of the development to whatever the main nodal points inside the city, and what the development will look like when it is ready 1, 2, 3, 4, 5 years from now. Post that, you can click on the app again. You can download all the documents. Your title plan, your approval plan, the standard registration agreement, the deed of conveyance, the local authorities plan. You can look at the registered agreements of every single buyer who has bought around you to understand how the land prices have changed over the last 3, 6, 9, 12, 18, 20, any cut of time which you need to take since the project started. And once you are done all of that, you can then choose to buy. And once you bought, you can again at the end of the delivery period come back and say, now I want to build a house which looks exactly like this. I want this to be designed like this. I want this to be leased out. And for all of this, you never need to come and meet anybody in person. Everything is across the screen. And that, Arun, is the only way to really create any large traction or volume in this segment. Otherwise, people have gotten so scarred by investing in land and getting stuck there that they will only invest it only for consumption. But the real value of land is intergenerational compounding. You own land in Thane in 2003. The rate was 1.5 crore rupees per acre. The same land in Thane today is worth 180 crore rupees per acre. That kind of return is not possible in my knowledge. 22-23% compounding return over a 10 to 20 year period across any geography in India. You can take Sona Road in Delhi, you can take Jubilee Hills, you can take Gachibowli in Hyderabad, you can take any location across the country where development has happened, where you participated with clean title land. The return which you will see will be 20 to 25% compounding return on a period of 10 to 20 years.
That's interesting. But I think there is probably this question in a lot of people's minds regarding how clean the titles would be, because I think that's an issue. That's a issue that even companies such as yours will have to surmount when you actually buy this. So how is one reassured, that the titles are cleared and in future they wouldn't be a hassle? So how do you work around that?
So I think there is a answer for the industry as a whole, and there's an answer specifically for what we do. For the industry as a whole, I think RERA has taken a very large role in ensuring people can only launch once the title is clean. And I think that allows people to ensure that they are buying into what is headache-free land. For us, in specification, we actually not only ensure the title is clean, we ensure every single owner of land, even if you're holding 1,000 square feet, you get a 712 extract transferred in your name for your piece of land with all approvals obtained onto it. What typically happens in plotted developments at point of time is that you may buy clean title. How do you ensure you get clean title transferred onto you and there's no future issues which come out of being part of a larger society? So I think the insistence on getting specific 712 extracts in the name of each buyer is an integral part of how the plotted development industry is going to change in this country.
This is also one area where you have seen the CAGR at upwards of 30%. So when an investor is investing in something like yours, I mean, generally in the plotted development space, what's the kind of returns that he can look at. And number two is, what's the kind of ticket size? Like, I mean, there would be so many small investors who would like to come in into this. I mean, not everybody need not be a Amitabh Bachchan for that matter. So how do somebody who's a salaried person look at it? Where can he begin, this?
So, great question. I think the returns have been quite paranormal over the last 2.5 years. On an average, most locations have delivered a 30% CAGR for the last 3 years. So we are present in 10 locations across the country at this point of time. We've not seen returns below 30% compounding anywhere. I don't think that's the right way or the right guidance for the future. If you're buying land, it should be with money which is 5 years to 10 years or above. In that period, historic data, it's not my data, it's data easily available across the country, tells you 20 to 25% compounding return on clean title land in any urban to semi-urban area has been the norm in this country since 1947. So I would say if you got 5 to 10 year plus money, 20 to 25% return over that period of time compounding is what you should be expecting coming from here. In terms of the ticket size, the smallest ticket size you can participate in starts at 15 lakhs. The largest goes to 10 crores. So almost every category of investor can participate. In fact, we've seen people who are extremely well-to-do, starting with a small ticket size, liking the experience, and coming back to buy second and the third time. At this point, around 27% of the people who buy from us actually are people buying with us for the second or the third time.
For the second or the third time?
Yes.
That's interesting. So, so what are the prerequisites to get into for an investor? Just as the investor would look at a trusted brand, I mean, that is, of course, there. And I think brands such as yours also have this kind of a benefit that, over a period of time, it's a time-trusted brand. So how important is the brand in this? And also, how do you look at the customer? I mean, I remember there are several development, and this I'm talking about properties, where a customer is sent away, because we won't give you this property, because the moment they come to know maybe you are from a particular profession or a particular salary bracket, then, it is out of bounds. So how do you look at the customer also?
I think eventually the brand is the most important asset which we own, because what we are specifically doing with our online frictionless model is we are telling people you need to trust what you're seeing across the screen and participate in that. And that's the only way for you to participate in the growing India story. Otherwise, you cannot participate sitting in Mumbai, you cannot participate in Vrindavan if you need to fly down every time to go and see what you're actually buying. And I think a large amount of the trust people have actually comes from the fact that the brand has successfully delivered over the last 2-3 years, and people have seen the kind of growth which we've created. In terms of how we look at the consumer, I think anybody who buys our way of doing business is welcome to participate, which largely means it has to be somebody who's quite tech savvy, quite brand conscious, because we are at a 2 to 3 times premium to the market wherever we are present. So somebody who's brand tech savvy, brand conscious, has a long-term affinity to hold and compound wealth, and is understanding of the way India's demographics is changing. In normal case, these turned out to be well-educated people who understand trends in India before most other people, and they are present across all cities. It's not that we are having participation only from a Mumbai or a Hyderabad or anywhere. We are having as much participation from a Kakinada or a Chicago as we are having from a Dubai or a Mumbai. I think people are quite financially savvy. Any financially savvy person willing to participate in New Age India is essentially our consumer, and that's the way we look at it. We also have a very detailed approach to understanding how our consumers look. So we have a very detailed approach on the demographics, on understanding their financials, on understanding their need for participation, because we are almost like wealth advisors. So we should be able to go and tell, Arun, it'll be better for you to participate in a 7-year story, which is going to play out better in Neral, as compared to a 15-year story, which is going to play out in Vrindavan, because you are actually buying this for the education of your son, which is going to get you in 7 years from now. And that's the kind of conversations which our people are able to have with our customers. So we play the role of effectively being technologically savvy wealth managers in the oldest asset class in this country, which is land. Just in the previous session, we had Mr. Nilesh Shah, who also cautioned us,
he mentioned Mr. Bradman. While he's a record holder in many ways, he has also had some ducks, in his cricketing career. So, what are the kind of cautionary things that investor in real estate should be looking at?
I think the most important thing is participate with names who have a track record for delivery. Don't try to go for a short-term return on investment. Real estate is really not the right asset class for it. And be very, very certain and sure that what you're bringing is as far as possible unlevered long-term money rather than levered short-term money. I think if you're able to do that, the India story is so strong. Wherever you participate, you'll do extremely well in real estate in India.
And what do you think finally are the hottest locations to buy land? I mean, after listening to you, I think a lot of us are rushing to do this. So, some of the, not just yours, which is presently, but even future.
So I would think the states of Uttar Pradesh, Rajasthan and Madhya Pradesh, these three states from a demographic, wealth creation and infrastructure development perspective, you buy anything in these three states, it should do extremely well along with Maharashtra.
That's wonderful. I think it should be a helpful tip. So thank you so much, Mr. Lodha. Big round of applause
Thank you,
to Abhinandan Lodha, Chairman, House of Abhinandan Lodha.